Alright guys, welcome to this lesson on how to avoid false breakouts. So basically, just like any other strategy out there, there will be false signals. So you gotta learn how to spot the false signals, okay? So one principle you need to take note of is the best strategy in the world will still have false signals. No matter what strategy you use. Price action, indicators, there will be false signals. Now the thing about trendline breakout is that there are 4 things that can happen after a breakout. So a lot of people think that during an uptrend, for example, and here's the trend line, when it breaks this trend line, then straight away it's going to go down. In real life markets, it's not that straightforward because there are 4 things that can happen. First thing is price goes in the direction of breakout, which is what you want. But there are other things that can happen. For example, price would range a little bit and then it will resume in the direction of the breakout. So, example, price breaks this trend line and then it goes in a sideways market before it goes down. Okay, this can happen too. Third thing is price ranges and resumes in the current trend, which gives you a false breakout. So instead of breaking out the trend line and then going down, it goes back up instead, continue in the current trend. So this would be a false breakout. Okay. Fourth thing that can happen is the current trend will continue and this will also be a false breakout. So this means that price break below trend line, maybe for 1 candle and 2 candle, after that it continue to go up. Okay, it wouldn't range, but it will just go up after 1 or 2 candles or maybe a couple of candles. Okay, this would also be considered a false breakout. Then how do you prevent from selling into something like that? How do you know whether it's a real breakout or a false breakout? Of course we cannot predict, right? But there are some ways that we can use to tell whether it's a false breakout or not. So I give you one example. You can see there's a bullish trend over here and price broke this trend line, and after it broke, instead of going down straight away, it did not go down straight away. Instead it went on a consolidation market and then the bearish trend starts. And one mistake that a lot of traders make is that once the price broke this trend line, then they feel that, oh, this trend line is useless now, let me just remove it. Now you need to understand that support can become resistance. Same thing for trend line. Support trend line, which tested here, test here, can become resistance. You can see price came back up and test here. Do you see that? So try not to remove a trend line once it has been violated. Okay. And this is an example of kind of a false breakout. You can see one over here. It broke below a trend line for a couple of candles, then it continues to go up. Right? And then when it goes to the end of the bullish trend, it came down a little bit and then it continued to go on an uptrend. Okay? So you can say that this is a false breakout depending on the time frame you look at it, but it can also be a very, very short term downtrend. So ideally when we trade trend line breakouts, of course everybody wants a trend that lasts very, very long. Okay? So there are a couple of ways that you can spot a false breakout. Example, check the strength of the trend line based on the factors I taught you earlier. For example, a very steep trend line. You already know by now that a steep trend line is not that strong, and you know that trend lines that are very steep, they are not that sustainable. And when the price break the very steep trend line, very often times you see the price go sideways. Okay. Another way that you can spot false breakouts is multi-time frame analysis. Later I'm going to show you how to implement this. Okay. You also wait for your 5 EMA breakout. Remember, when you're trading breakouts, you gotta use 5 EMA. On normal times, when you're not looking for a breakout, you can remove it. Okay. And make sure you check for divergence as a confirmation. And also check the amount of pips. Now the thing is, different currency pairs, you need to backtest. For some currency pairs, when it breaks up to a certain amount, let's say for example 300 points, okay, then most of the time when it breaks by 300 points, this is a real breakout. For some currency pairs that are more volatile, then you see a lot more breakouts and also false breakouts. Some currency pairs would be 300 points, some currency pairs 300 points would be a false breakout. So I need to backtest and note down by how many pips does the price have to break the trend line for it to be considered a real breakout. If it breaks by, for example, 100 pips is too little, then high chance it's a false breakout, okay? And also the breakout must come from a stable trend. So if the trend before the breakout is really volatile, then high chance the breakout might be false. But if the trend before the breakout was going up really steadily, is pretty stable, okay, then when it breaks the trend line, then higher chance it will be a good breakout. It will be a real breakout. If the trend is super volatile, okay, especially for those currency pairs with high volatility, you wouldn't want to trade the breakout too seriously because it might be false. And also look at the price action on breakout. Let's say for example, on the breakout right here, you see a bearish hammer candle, okay, which indicates to you that the price is going to continue to go down, and this would act as a confirmation that price will continue to go down and that the breakout will last longer and that it is not a false breakout. And most importantly, use oscillator as a confirmation. Okay, just now I mentioned to you about multi-time frame analysis. So how you can use it is basically, if you look at this bullish trend line over here, which is in H1, this is the H1 time frame, okay, and the price broke here. Do you see that? Then if you only rely on H1, you would have sold because you can also see 5 EMA broke below the trend line. But instead of going down, it kind of continued to go up a little bit, then it continued to go up and form a triple top before it breaks the trend line downwards again. So this is a false breakout over here. How do you know whether this is a false breakout? You gotta shift to H4, okay? Because if you switch to H4, okay, this white line is your 100 SMA. But make sure you use all the SMAs that I taught you. The 50, 100 and 200, okay? I'm just putting one line so that I can explain to you simply and you don't get confused. Okay, in the H4 time frame, at this point in time, okay, can you see where is it in H4? Right here. And is this above 100 SMA or below 100 SMA? Above, okay? While in H1, it broke below 100 SMA, it seems like it's going downtrend. But then in H4, the bigger picture, it is still going uptrend. Do you see that? Obviously, there's a false breakout. Now, if you look at a real breakout, which is this yellow line over here, okay? Price went below 100 SMA, broke the trend line once again. At this point in time, look at where the price went to, below 100 SMA. So this is a confirmation for you that the bullish trend has ended. Now this is not easy because you need more patience, okay? Because if you have to trade based on H1 alone, you're gonna get a lot of false signals. But if you double check using higher time frames, of course you're gonna wait a little bit longer, but it's worth it because you prevent a lot of losses. Now I think some people ask, Karen, should I construct my trend line, draw my trend line based on candle high and low, or should I draw it based on closing price? Personally, I would draw it based on high and low, but if you feel that closing price is more suitable for you, then what you can do is that you can change your chart to a line chart, and then because all the data are based on closing price, then you can just draw a line based on the green line over here, which is the closing price. The good thing about using a line chart is that you won't get distracted by the temporary fluctuations of the candlesticks. But if you have to ask me which one would you use, I would prefer using candlestick chart and then drawing it based on high and low. Of course, some people will say closing price is more accurate, but do what's more comfortable for you, okay? Okay, then how do you use momentum oscillators as a confirmation? So let's say, for example, this is a bullish trend over here, and this is the trend line, okay? Price broke over here. And how do you know whether the price is going to continue to go down? You see the first attempt where it broke over here on this red line, stochastics is sloping upwards. This is what you don't want to see. Because you are looking for the price to go down, you don't want the stochastic to be pointing upwards. Whereas for the second point over here, price came out and tested the trend line, became resistance. Stochastics went from overbought back into a neutral level. This is a good chance to get in, especially if you are somebody who like to pick tops and bottoms, okay? Okay, over here you see a downtrend, and this is our trend line. So, and price broke on an overbought level, okay? On a downtrend, when it breaks the trend line, you expect price to go up, right? So when it breaks on an overbought level, be prepared for the price to retrace. And after that, yes, it did. You see on the second point over here, price retraced and became the support. Price retraced and then test this resistance trend line, which became support. What lesson can you learn from all these examples is that don't take the first breakout seriously. Because a lot of traders, when they see trend line breakout, they're going to enter straight away, okay? What you should do to get a good risk to reward ratio is to wait for the price to retrace and test the trend line. After that, wait for confirmation signal, for example, bullish candlestick signal, and then you go in, okay? And moreover, when price came back, retrace and test this trend line, stochastics went to oversold. So if you have to compare, is it better to buy when stochastics went to overbought, or is it better to buy when stochastics went to oversold? So you know the answer. Okay, one more example for you. The thing about trend line is that, of course, on hindsight, you wouldn't know whether it's a real breakout or a false breakout, right? So to illustrate the point for you again, this is our trend line over here, and price broke right here. And again, when it broke on an overbought stochastics. So do you think that this is the end of the trend, or will price continue to go down? In this case, price continue to go down. Now you wouldn't anticipate the end of the trend because the bearish trend hasn't even started, right? So if this kind of thing happens right in the middle of the trend, it's most likely a false breakout. And most importantly, if you went through the previous lesson on adjusting trend lines, you will adjust this trend line upwards, okay, to this high over here, like that, okay? And some more, if you zoom in to this breakout, you see that you have a little gravestone doji, not one but two. So there are a couple of bearish candlestick signals which tell that high chance this is a false breakout, okay? Okay, another example for you. Bullish trend, price break below this trend line. Now of course you realize that sometimes when the price breaks the trend line, it wouldn't retrace back and test the trend line, which happens sometimes. So if you wait for the price to retrace back to the trend line, you might have missed out this trade, okay? And somehow when it breaks this trend line, it didn't break on an overbought level, okay? It broke on a neutral level. Then some people ask, how come we cannot trade breakouts on the prevailing trend? Meaning if you're in a bullish trend and it breaks upwards, can you buy? Example like this. You can see I drew our usual trend line, bullish trend line at the bottom, but I also drew a trend line on top where it tests the resistance, right? So should you draw this? So it becomes kind of like a channel. Should you buy over here? That's the question. Can you trade breakouts on the prevailing trend instead of just waiting for a sell trade over here? The reason why I don't teach you how to trade this how to buy at this point is because very often times, yes, a breakout on the upside might mean that, okay, bullish trend is very strong. But then most of the time, when you see a breakout on the upside, you see a big bullish candle or you see a lot of bullish candles. And you know that by now, price would become overextended. And then traders would start to take profit. And then when traders start to take profit, sellers would start to come in because they see the price going down. Even if you buy when it breaks on the upside, the trend probably wouldn't last very long. You would be able to ride the trend for maybe a couple of hours, but even if you get in, you wouldn't get a lot of pips most of the time. And this is especially true if you see a breakout on the upside at the end of the trend. Okay, the same thing for bearish trends. You can see I drew my usual trend line over here, and I also drew one at the bottom, okay, where it tests all these points. And of course, along the way, there are false breakouts. Price broke over here at the end of the trend. Remember when I said when price makes a massive sell-off at the end of the trend, what does it mean? High chance. This would mean that the bearish trend has ended or is going to end. Because the thing is, everybody who wants to sell, they already sold. Okay, the supply has already become limited. Traders will start to take profit, and hence price would U-turn and then reverse. Okay, so try not to trade breakouts on the prevailing trend, especially when it occurs at the end of a downtrend. Okay, so with that, I'll talk to you in the next lesson. Bye.